Hi, this is Mateo, Mortgage Garcia, just checking in with everybody. I wanted to talk briefly today about some changes coming up regarding debt to income ratios and automated approvals. Typically right now, as a lender, most, loan programs, typically require a customer to be under a 45% debt to income ratio. What this means is we don't want, the new house payment, whatever that amount may be, plus your current monthly expenses such as car payments, credit cards, anything on a credit report. Typically, we don't want that to be more than 45% of your gross monthly income. This has always been basically kind of an underwriting standard or guideline, but with a lot of the automated approval systems, especially a desktop underwriter that Fannie Mae uses. Um, in some cases, you've been able to exceed a 45% debt to income ratio because of some other compensating factors, such as a high credit score, a large down payment. So in some cases, if you have a client that is above a 45% debt to income ratio, but if it was only maybe a 46, 47, 48, 50, just a small amount, usually you're able to still get an automated approval to move forward with this actual home loan. Well, in November, Fannie Mae is kind of tightening up on their automated underwriting engine, and basically they're going to put some parameters in the system where most loans will not get approved if it's above a 45% debt to income ratio. Well, what does this mean? Well, if you're in the market to purchase a home now or possibly refinance, and your income, may be a little bit tight in terms of overall qualifying, it's definitely imperative to, start working on, hey, trying to find a house immediately, or talk with your loan officer about getting your refinance going, so you can get your loan, closed and funded prior to these changes being made. If you're in the market to be purchase a home in the next couple months, one thing that you may want to discuss with your loan officer, is, hey, if you get some overtime, bonus pay, commissions, anything like that, to be sure that those are going to be reviewed and acceptable to be used in case you're at a high debt to income ratio. If you have any questions or concerns, or you're a real estate agent or a customer, you have some question about these changes, or just want me to kind of look at your overall income to see where you're at with these debt to income ratio guidelines, feel free to either pop me an email, mateomortgage@hotmail.com, or you can always call me 480-688-9722. Have a wonderful day. Bye bye.